Stocks with a huge rally from the April lows to this morning's record highs, but pulling back on the news that the U.S. is calling off trade talks with Canada. And I'm going to just go ahead and interrupt myself because we do have some breaking news. Those Fed stress tests are out, and Leslie Picker has it for us.
Hey, Morgan. Yes, all 22 banks tested remain above their capital requirements after absorbing hypothetical losses of more than $550 billion this year. The scenario by which the banks were tested against was widely seen as more moderate, evidenced by the aggregate decline in the Common Equity Tier 1 capital ratio of 1.8%, the lowest decline in years. The 2024 results, by comparison, showed hypothetical aggregate declines of 2.8%. This is the first round of stress tests with Michelle Bowman in the vice chair for supervision seat, although the test was developed before she took that role. Under this new regime, though, there's been a broad expectation of loosening capital requirements and regulatory reform. Just this week, the Fed proposed an easing of another leverage rule. Bank stocks are up about 4% over the last week on optimism surrounding capital. As for today's results, though, Vice Chair Bowman said in the statement that, quote, one way to address the excessive volatility in stress test results and corresponding capital requirements is for the board to finalize the proposal that would average 2 consecutive years of stress test results, which was released in April. Fed officials said that the better results this year were driven in part by the way the test was designed, as well as the strong recent performance from the banks. The hypothetical losses included $158 billion in credit card losses and $124 billion in commercial and industrial loans. On Tuesday, the banks are expected to each provide details on how the results of this test impact their plans for buybacks and dividends. Morgan.